Friday morning, everybody. Welcome to today's edition of the Daily Market Commentary. Hope everybody's having an absolutely great morning and had a great trading day yesterday. I am your host, Chuck Fulkerson. Let's go ahead and do what we do each and every day. We look at the same 10 to 12 futures markets, identifying potential turning points and breakout trades. For those of you new to the channel, do me a favor, click the subscribe button down below so that you get the updates as they come available. So let's go ahead and dive right in. So the S&P, we finally were able to break that 2,800 barrier. You know, it got rejected yesterday. A price came to it, rejected it, came to it again. It rejected it, and then it finally popped through. Now it did chop around a little bit after finally breaking. But in the overnight hours, we have sold off fairly hard. You know, when you open up the futures today, it's going to say that we're up 1 point. I don't believe, the up 1 point for a minute because, in my mind, we're down about 8 points. Because we were, way up here and we got a strong reversal right after the European Open. Now, we are actually sitting at what could be a really good candle-to-candle opportunity to get long. This is a nice healthy pullback to a former breakout area. So let's see if this becomes a potential for somebody to get long off of this movement. The Nasdaq brand new all-time high was created again. So our all-time high is fresh and newly created. So if you're going to get a long, you're probably actually with a better opportunity to get a long in the Nasdaq. And that Nasdaq long would also correspond with this area right here. So this could be a chance. I'm going to try to get this video out really quickly so that you can look and see if you get a chance on a candle-to-candle basis. Then you might choose to take a long on this. Crude oil. So crude oil, yesterday I talked about the 4-hour candle-to-candle short opportunity. So that would have been getting short below this candle right here, and that's exactly the very next candle was a strong move down, but we haven't really done much since then. Now, we also haven't put in a higher low. Remember, in candle-to-candle trading, my stop goes above the last high. So when I would get into the trade, I'd get in. Initially, our entrance would have been getting short right below here with a stop right above here. The next candle, boom, price came all the way down to here. So the next candle, you take your stop and you move it down to here. The next candle, price didn't give us a new low, but we have a new candle, so we can move our stop to here. Well, then we've now had, so now you've locked in a little bit of profit. The next candle, you move your stop to here. You locked in a little more profit. The next candle here, these basically had the same highs, so there's no change. And so now we're sitting right here. So now the next candle that we get, as long as I continue to get higher lows, I continue to move my stop down, and that's how we trade this in a protective style. It allows me to let this thing continue to run. Now, this is a 4-hour chart. It's up to you if you want to hold it over the weekend or not. But that would be the play using the 4-hour candle style. So hopefully, let me know in the comment section below if you're able to take advantage of that move. In gold, the level I would look at is this area right here for a potential reversal today. Downward trend, still continuing its move. Kind of heading forward from this. Looking at bonds, the Aussie, the Euro, the Canadian. So in the Euro, here was our breakdown, which then failed, which then we broke down again, and now it's falling from that breakdown area. I had anticipated that Euro breakdown being a little bit stronger. We didn't really get a whole lot out of it, but then we also didn't get much out of the bonds breaking above this triangle pattern. Now, we did get a little bit of a move, and it has happened. Remember yesterday I said that just because when we have a triangle pattern doesn't mean it's going to break out to the downside. It can break out one way or the other. In this case, it broke out to the upside. Kind of a lackluster movement out of it in the beginning, but overnight, as the stock market has taken a little bit of a hit in the last few hours, the bond market has rallied. So that one's continuing its move. I would now, if you're in this thing, take my stop and move it up underneath here to lock in a small profit. Looking at the Aussie, Not a huge fan so far of our arrival into this Aussie position because of this basing just before. I'm not going to change the position yet. I'm still going to leave it in place, but I will look and see. If we base before here, I may cancel the position. So I don't normally like to take the lines off the charts, but I will tell you if we base before there, I'm not going to take this for an entry. All right, looking now at the Great British Pound, Japanese Yen. Nat gas, I had a potential breakout below this 278 area. We've not been able to quite get below it yet, and so that level is still it's still on my radar screen. The Great British Pound, the area that I want to look at is this area way up here for a potential reversal. If price indeed comes back into this region. And then on the Japanese yen. So on the Japanese yen, we've got this area up in here. Now, we had talked originally about shorting earlier in the week. We had a short on the yen way back here, which turned out to be a really nice short. And it's made a strong move down. I think there's another opportunity to get short right in here and maybe even right in there. So, couple of more opportunities to get in. Remember, it's up to you on how you hold your positions over the weekend. Not everyone's going to be comfortable holding their positions over a weekend. It's all going to depend on your overall risk tolerance on that position as well. So the S&P and the Nasdaq, once again, the Nasdaq is continuing its move up. Real quick, let me take a look at the Russell 2000. So taking a quick look at the Russell 2000, I know a lot of traders really use it. It's not one that I look at very often. The Russell was not playing ball yesterday. Dennis did a nice job of kind of pointing that out on the Twitter feed, talking about how as everything else was moving along and playing ball, the Russell just really wasn't doing it. And the Russell on the 4-hour chart, as you can see, has a little bit weaker movement than the overall S&P yesterday. In the overnight hours, it hasn't had it's had, pull that to an hourly chart. In the overnight hours, it's had a little bit of a pullback, but it didn't have the same highs as the larger markets. Now, I don't normally look at the Russell. I try to stay primarily to the major markets, but I've had a lot of people lately that have asked me to look at it because it is something that they use, and it's having a tough time popping through this 1700 area, right? That's become kind of the resistance point in the Russell, is that 1700, where we had that little bit of fair price value area here on the left. It's got some room to run if it can break above that 1700. I'm just not sure it's going to make it through there today. Same thing in the Dow. The Dow, we haven't come to the same heights that we did in the other markets. It's still rallying, but it's not rallying at quite the same pace. So just kind of keep an eye on it going forward. I don't trade either one of those. That's why I stick to the ES and the NQ. They're the two that I want to primarily focus my attention in on. This weekend on Sunday, we will do our normal weekend edition. I'm also going to have a pretty cool announcement on a few changes for the daily market commentary and a couple of other things that I've been getting a lot of requests for. So we'll talk about that on Sunday. Until then, I hope everybody has a great weekend and a great trading day today. And if you have any questions, please shoot me an email, chuck@iifinancial.com. Talk to you soon. See you later.